Ladies and gentlemen, welcome and thank you for joining today's web conference, Employment and Affiliation in the HUBZone program. Before we begin, there are a few technical details we would like to share. First, please note that all participant lines will be muted for the duration of this event. You are, however, welcome to submit written questions throughout the presentation, and these will be addressed after the conference. To send in a written question, please use the notes function on the lower right-hand side of your screen and address your questions to all moderators. In addition, you can adjust the presentation view on your screen by simultaneously clicking the Control and the plus or minus button on your keyboard. If you require technical assistance, please send a note to the AT&T CES operator via the notes or call our help desk at 1-888-796-6118. With that, we turn things over to Mariana Pardo, Director HUBZone Program. Please go ahead.
Thank you. My name is Mariana Pardo. I'm the Director of the HUBZone Program, and I'm joined here today with my colleague, Mark Hagedorn, an attorney advisor with our Office of General Counsel. Our goal today is to concentrate on the definition of employee, the residency requirement, the principal office requirement, and how that connects very closely to the purpose of the HUBZone program. We want to cover affiliation, how that plays in connection with the topic of employee and principal office. We also want to go over best practices for maintaining the compliance as it pertains to the 35% HUBZone residency and the principal office requirement. The reason why we are dedicating this webinar to this topic is because it's crucial for the companies to understand how to properly count employees so that they can properly maintain compliance. After today's presentation, the goal is for you to be able to understand who is an employee, who qualifies as an employee for the HUBZone program purposes. An employee is a regulatory term, and we want to explain point by point what we mean by employee. And you also will understand when employees from an affiliate or another entity may be considered in assessing the firm's qualification in the program. And also, obviously, how to maintain compliance so that the firm can confidently bid on HUBZone contracts as a qualified HUBZone small business concern. So the purpose of the program is to increase employment opportunities. Thus, the 35% residency requirement is extremely crucial. It connects to that goal. Also, the purpose is to stimulate capital investment to occupy otherwise vacant buildings, purchase them, lease them, and promote economic development in these areas. So the principal office requirement is crucial to stimulating that capital investment. Go, Mark, on this particular slide.
Great. Thank you, Mariana. So we're actually going to dive into the two HUBZone-specific regulatory requirements for eligibility. And we're going to start by talking about the 35% HUBZone residency requirement, which states that in order to receive HUBZone certification from SBA, at least 35% of the concern's employees must reside in a HUBZone. Now, I'm not a huge numbers guy, but the easiest way for me to calculate this figure is to take your total employee count and multiply it by 0.35, and that's 35% of your employees. It's very important to note that your employees do not need to live in the same HUBZone in order for them to qualify towards the 35% HUBZone residency requirement. So a firm can have employees scattered all across the country in various HUBZones in different states, counties, and they can all count towards the 35% HUBZone residency requirement. When determining the percentage of employees that must reside in a HUBZone for HUBZone program purposes, if the percentage ultimately results in a fraction, SBA regulations direct the firm to round up to the next employee. So this is an example right here that we have that's actually directly out of the regulations. If a firm has 95 employees, 35% of that would be 33.25 employees. Therefore, for HUBZone program purposes, a firm would have to have 34 employees residing in a HUBZone in order to meet the 35% HUBZone residency requirement. So again, if the percentage results in a fraction, regardless of how small that fraction is, there is going to be a roundup required. The last note here on the general 35% requirement page is that when assessing compliance with the requirement, only consider where employees reside, not where they work. Where an employee works is a function of the principal office requirement, which we are going to get to later in the presentation.
And one thing I wanted to kind of encourage the participants is remember that the 35% is a minimum. So obviously you want to have a little bit of a cushion there because there's no provisions in the regulations. You are going to talk about, there's only one time when a firm can actually fall below that residency requirement, but the companies must maintain that minimum throughout in order to maintain the certification. So all it takes is really one employee to move across the street sometime and for the firm to be out of compliance, and there's no provisions right now in the regulations for allowing that.
So now we're going to talk about that one time that you can dip below the 35% HUBZone residency requirement. So it's, I guess, somewhat of a nuance to the requirement, and it states that a qualified HUBZone firm must attempt to maintain the 35% HUBZone residency requirement during the performance of any HUBZone contract. And the purpose of this attempt to maintain provision was really to provide some flexibility to HUBZone firms that were ramping up operations to ultimately perform a HUBZone contract. So undoubtedly these firms would be hiring employees very quickly to perform under these contracts. And so SBA allows a firm to temporarily dip below the 35% threshold during the performance of a HUBZone contract as long as that firm is making documented efforts to ultimately meet the 35% HUBZone residency requirement. So in our slide here, we give two examples of documented efforts that might work. Job posting that would target HUBZone residents as well as attendance at job fairs located in or around qualified areas. Do you have any others, Mariana? That
I think that those are the most common, really.
It's important to note here that a HUBZone firm may not submit offers on new HUBZone contracts while it's attempting to maintain the residency requirement. Or in other words, you must meet the 35% HUBZone residency requirement anytime you're going to submit an offer on a HUBZone contract. So the attempt to maintain provision is only a safe harbor provision as it pertains to the performance of an existing HUBZone contract, not new HUBZone contracts or work that you would be pursuing.
Right. So for example, HUBZone contracts. We did a webinar that is in the YouTube already for HUBZone contracting for HUBZone. So we're meaning the set-asides, a full and open when the firm got the benefit of the price evaluation preference. They would fall under this attempt to maintain.
Absolutely.
Now, if I'm a HUBZone firm and I get a contract and I win a contract that is a women-owned small business set-aside, and I get an award on that, and the agency is taking credit that I'm a HUBZone, can I avail myself of the attempt to maintain?
I believe you can. Yeah.
Even though it's not a HUBZone contract.
So the attempt to maintain provision is applicable during the performance of a HUBZone contract. So if it was a WOSB set-aside contract,
right,
then the attempt to maintain provision would not kick in.
Would not kick in.
Right.
So, okay, so let me clarify then. So if I'm a HUBZone firm, I bid on a woman-owned small business set-aside. The agency gets credit because I'm a HUBZone and obviously woman-owned, so they get the two check marks. However, I cannot fall below the 35%. I'm not protected under safe harbor because it's not a HUBZone contract.
That's correct, yes.
It is a woman-owned small business set-aside.
Correct.
Okay, same thing if it was an 8A, set-aside,
exactly.
all those things.
Right.
The only time that this attempt to maintain comes in is when it is a HUBZone contract, set-aside, sole source, price evaluation preference applied.
That's correct.
Okay. Okay, thank you. And then, of course, that note at the bottom that you were mentioning, that's the importance of knowing how to properly count, because a company is going to be submitting an offer, and we're going to cover protests and appeals March 14th in another webinar. So, but it is very important because when the firm is submitting that offer, they may submit an offer today, but if they don't have all the documentation that proves compliance today, the award may be 6 months from now, and they may have a protest, and they need to be able to prove that they were in compliance back in February 2018.
That's correct,
right? Yeah, so that's the importance of really knowing how to how to calculate employees. Okay, thank you.
So next we're going to move into the principal office requirement, which states that with the exception of certain specified entities, qualified HUBZone small business concerns or applicants to the program must have a principal office that's located in a HUBZone. And the idea behind the principal office requirement is that economic development ultimately emanates from commercial activity. So you have to imagine that if employees are working in a HUBZone, they're going to be going out to lunch in the HUBZone. The business is going to be using the local services of other businesses that are located in the HUBZone. And so the economic development that stems from that is really at the heart of the program. SBA regulations define principal office as the location where the greatest number of the concerned employees at any one location perform their work. And so please note the distinction between greatest number and what a lot of people would think of as a majority. It's not a majority requirement. It's probably better described as a plurality requirement. So an example would be if a firm has, let's say, 13 employees, 5 of which work at a location that's located in a qualified HUBZone, 4 of which work at a location that's not in a HUBZone, and then 4 of which work at another location not in a HUBZone, this firm would still meet the principal office requirement because the greatest number of the firm's employees are working from a HUBZone location. So again, that was 5, 4, and 4, 5 being in the HUBZone. The regulations also state that for concerns whose primary industry classification is in service or construction, the principal office determination does not include employees who are performing the majority of their work on contract-specific work on site for a client. So if you have a services contract that requires you to provide individuals to perform at government sites, those individuals working on specific contracts are going to be excluded from the principal office determination. The note down here at the bottom states that we had a similar one for the 35% rule, but when evaluating principal office compliance, only consider where the employee works, not where they live. So again, this is looking at all of your employees and then assigning them to a particular office regardless of whether they are HUBZone residents.
So basically, I could have if I have, let's say, 2 locations. Well, before I go there, is principal office my headquarters?
Not necessarily. You can have your headquarters at one area that would not necessarily qualify as your principal office if your headquarters is not where the greatest number of your employees work from.
Got it. So if I have, let's say, my headquarters is not in a HUBZone, and I have a couple of employees, and then I have 3 employees in another location that I have that is in a HUBZone, the people that are working in that HUBZone location, then they don't have to be HUBZone residents. That's basically what that note says.
That's correct. Right.
So I could have non-HUBZone residents there, and that's basically, I guess their money is just as good as,
sure.
It doesn't matter because they're going to be patronizing the businesses around them.
Absolutely.
Yeah, that's really the purpose of the principal office. Question about the employees, like in service or construction, you sometimes see folks either that, let's say that I'm working in the office, but then I go, I'm a superintendent, and then I go and I supervise folks. So I go in and I supervise job sites A, B, C, and I come back and I do some paperwork, and then I go back, in and out, in and out, in and out. Where do you assign me? Am I an office employee or am I a job site employee?
So by policy, SBA has determined that we would look at where the majority of the time is spent. So if an individual spends time at multiple offices, we would look and see where the majority of his or her time is ultimately spent, and then we would attribute that individual to that particular office.
Right. Now, if I have a situation where I have only one office, and I'm in, construction, let's say, and there's 10 of us, it's a small firm, 10 of us, and I'm the owner. And all of us go into the office and pick up the work orders, the equipment, and all that, and then we go out and we work outside, all of us. But I do have an office there. But all of us, the majority of our hours are in job sites. And then at night we come in and actually drop off the equipment and all that. Do I meet the principal office?
Based on those facts, probably not. If it's just a pick-up and drop-off spot, the majority of the work is really for contract-specific work on site, and therefore those employees would be excluded from the principal of determination. But again, this is a very fact-specific, intensive analysis. So if applying to the program and you have facts like that, please reach out to ask us if you have any questions. But based on what you've described, probably not.
Yeah, and I think that based on in the previous slide as to the purpose of the program, if any, I guess my recommendation perhaps to the audience is if you are in a situation that, you know, it's midnight, you're about to bid on a contract and you're wondering, ooh, is this area an office, or go back to that economic development purpose of it, right?
Yeah.
Okay.
So now we're ready to talk about the regulatory definition of employee. We've discussed that employment is very vital and important to the HUBZone program. So we would like to just show you actually what the text of the regulatory definition is. For ease of understanding, we've broken it into 3 distinct parts, and then we're going to actually discuss and analyze each part in turn. So let's start. It says, and this is at 13 CFR Part 126.103 if you'd like to take a closer look. Employee means all individuals employed on a full-time, part-time, or other basis, so long as that individual works a minimum of 40 hours per month. This includes employees obtained from a temporary employee agency, leasing concern, or through a union agreement or co-employed pursuant to a professional employer organization agreement. The main takeaway is that for purposes of demonstrating compliance, the primary documentation of employment is really going to be payroll. And so SBA will generally collect and review company payroll records for the completed pay periods covering the 4-week period leading up to the date of evaluation. So if you pay your employees biweekly, that would be the 2 most recently completed pay periods and the records that would support that. If you pay your employees every week, it would be the 4 pay periods leading up to that date of evaluation. For temporary or leased employees, SBA is also going to collect and review the agreements governing the employment arrangement. And so that might be the leasing arrangement or the union agreement that is ultimately underlying that arrangement, as well as all the payroll documentation that will support that agreement. Quick note here down at the bottom, if you are thinking about applying for the program or demonstrating compliance at any point, please note that in order for an individual to qualify as an employee, that individual must remain employed through the date of evaluation. So if you've applied to the program and an individual is counting as an employee initially, that individual to continue to count for purposes of receiving certification must also be employed at the time of evaluation or certification. The next part of the regulatory definition states that SBA will consider the totality of the circumstances, including criteria used by the IRS for federal income tax purposes and those set forth in SBA's size policy statement number 1 in determining whether individuals are employees of a concern. And this is really, this is the heart of the regulatory definition, is the totality of the circumstances. Now, the purpose of the totality of the circumstances analysis or test is really to preserve the integrity of the program, but to also prevent certain employment practices that would otherwise circumvent the Small Business Act and its implementing regulations pertaining to the HUBZone program. And what this basically means in a nutshell, and we're going to go over it in greater detail, is that for HUBZone program purposes, SBA will review the totality of the circumstances to determine whether individuals who might otherwise not qualify as employees should nevertheless be treated as employees for HUBZone program purposes. And this might be individuals who are working for a firm but are not on payroll, independent contractors, for example, perhaps owners, other managers who might not be on payroll, folks who don't work 40 hours per month. These would all be captured by the totality of the circumstances analysis. So we're actually going to continue fleshing out this totality of the circumstances concept, and specifically we're going to look at the IRS criteria that are used to distinguish employees from independent contractors. The IRS guidelines state that in general, an individual is an independent contractor if the payer or the employer controls the end result of the work but not the methods of performance. So the IRS uses 3 big common law factors, including behavioral control, financial control, and the relationship between the parties. We're just going to discuss them very quickly. The factors that we've listed are not exhaustive by any means. There's some of the big ones that we've pulled out that are generally more indicative of the distinction between employees or independent contractors. But if you have any questions, reach out to a specialist in this area, certainly. But with regards to behavioral control, the underlying question is really who has the right to direct or control the worker. And we generally look at things like the type or the degree of the instruction that's given on the job site, if there's training that's being given to a particular worker on the job. More instruction and training is generally indicative of an employment relationship. If the methods are generally selected or under the control of the individual working, then that's generally more indicative of an independent contractor. For financial control, the ultimate question is who has the right to control the financial and business aspects of the job. So one of the things we look at is the opportunity for profit and loss. A contractor will generally perform a specific task for a set fee, and therefore based on how that task is completed, there is an opportunity to profit but also lose. With an employee, there's not really the same opportunity there. You do the work for wages, and whether you do it well or don't do it well, presumably you get paid. The other issue that we typically look at is the method of payment. Payroll wages are more indicative of an employment relationship, whereas invoice payments or vendor payments are generally more indicative of an independent contractor relationship. The last common law factor that the IRS uses is the relationship between the parties, or specifically how the parties perceive the relationship. So documentation and evidence that we look at includes written contracts, such as independent contractor agreements or employment agreements. So if the parties have reduced their agreement in writing, then generally that writing is going to be indicative of either, whichever is applicable. Also, if there are employee-type benefits, like pensions or leave, vacations, all that kind of thing, if an employer is providing that, that's generally going to be more indicative of an employment relationship. So next we're going to move to SBA size policy statement number 1. This was issued in 1986 out of concern that a mechanical application of SBA size regulations ultimately encouraged creative employment practices that would paint a false picture of a firm's size status and eligibility for small business contracts. So what the size policy statement ultimately gives is guidance for treating independent contractors as employees on an other basis as provided in SBA's regulations. In essence, what this does is it gives SBA the authority to distinguish bona fide common law independent contractors from de facto employees who have just been labeled as independent contractors. So what the size policy statement does is issue 11 questions that kind of take the IRS criteria and run with it just a little bit further. And I think it might be helpful to just go through the questions and talk a little bit about them. The first question is, did the company engage and select the employees? If the company did, then that's generally going to be more control-oriented, and it's probably going to be more indicative of an employment relationship. Does the company pay the employees' wages and or withhold employment taxes or provide employment benefits? Again, just like on the last slide with the IRS criteria, generally, if the company is paying benefits, it's going to be an employment relationship. Likewise, if employee benefits are not provided, then that might be more indicative of an independent contractor relationship. Does the company have the power to dismiss the employees? Again, this gets to the heart of it, control. Who ultimately has control over the employees? 4, does the company have the power to control and supervise the employees' performance of their duties? At the heart of an independent contractor is that that individual has control over the method of the performance of work. If that's not present, that's generally going to be an employee-employer relationship. Did the company procure the services of the employees from any employment contractor involved in close proximity to the date of self-certification as a small business? Generally, the closer you are to self-certifying your small business size status, the more eyebrows it raises if you bring on individuals as independent contractors.
So let me ask you on that one. So let's say that I have the size standard for my makes is, I don't know, 450. And I'm at 449 or 450. I'm right at 450. I'm still considered small.
Sure.
And I have this work coming in, and I need to hire 30 more people. And I bring them as independent contractors. That may be perceived that I'm trying to circumvent the regs, because if I would bring them as employees, then I'm exceeding the size. Is that what number 5 is?
Yeah, that's getting to it, and specifically it's addressing when you brought them on as independent contractors. Were they brought on seemingly in connection with the ramp-on process for bidding on this contract, or were they brought on a year before to do seemingly unrelated tasks and they've still remained on performing work for the company as independent contractors? So the closer they're brought on, generally, the more likely it's going to be found that they might be de facto employees and therefore included for size purposes and for our purposes, HUBZone purposes. So, but I think 6 might be getting kind of what you were discussing. Does a company dismiss employees from its own payroll and replace them with the employees from an employment contractor involved, where they replaced soon after their dismissal? And again, the concern here was that firms were getting closer and closer to the top of their size standard, and all of a sudden, 30, 40 employees were laid off, but hired on immediately as rebadged independent contractors. So if the facts and circumstances lend to that conclusion, then those folks who were dismissed but then ultimately brought back on as contractors would likely be found as employees for size and also HUBZone purposes. The next page, we're just going to keep going on these. Are the individual employees supplied by an employment contractor involved the same individuals that were dismissed by the company? Again, very similar to 6. If you're bringing on the same people that you let go, very indicative of employment. And so those individuals will probably be treated as employees on an other basis for size and HUBZone eligibility purposes. 8, do the employees possess a type of expertise or skill that other companies in the same or similar lines of business normally employ in-house, as opposed to procuring by subcontract or through an employment contractor? So this is very similar to industry custom. And in this case, if folks are being brought on as independent contractors that would normally be employed in-house, then those folks might be treated as employees for size and HUBZone eligibility purposes. This will vary by industry, but in that line of work, if they're generally going to be employees, but for you bring them on as an independent contractor, and there are other facts and circumstances that might suggest that individual ultimately acts as an employee, then they might be treated as such for SBA purposes. Do the employees perform tasks normally performed by the regular employees of the business or which were previously performed by the company's own employees? So now, as opposed to looking at industry standards, we're going to look at this. This is more firm standards, firm-specific standards. Do you have independent contractors doing the same work alongside employees? Or is their work a little bit different? Or are the methods of oversight and supervision a little bit different? If it's hard to make that distinction, then they're probably going to be treated as employees. If they're doing different work or they're being supervised differently, different levels of control, then that's more indicative of an independent contractor relationship. Were the employees procured through an employment contractor to do other than fill in for regular employees of the company who are temporarily absent? So again, we're just looking at the circumstances under which they were brought in. So if they were brought in to temporarily fill a gap, that's one thing. But if they weren't, then we might treat them as employees.
So if I have an employee on maternity leave, she's my accountant, full-time employee, she's on maternity leave for the next 6 months, and I bring another person to fill in those 6 months, that person could be considered an independent contractor?
I would say so, right.
Yeah.
If it's limited, in terms of duration, then I think that's probably more indicative of an independent contractor relationship.
Right. Now, if that person remains, my employee comes in from maternity, then I keep the other person did a great job. I'm expanding and I'm keeping that person, but I'm keeping them under an independent contractor status. They're basically doing a very, very similar work to my employee that's returned from maternity. That is a problem then.
Right. If they're doing the same kinds of work and they're working alongside each other, then that might be, again, more indicative of employment. And the last factor is, does the contract with the independent contractor have a term based on the term of an existing government contract? If it is, it gives the appearance that the firm may be trying to circumvent the size regulations and their eligibility in connection with that specific contract. So if they're only bringing on those folks as long as they have the contract, then they would be generally employees working under that contract. If they were brought on unrelated at a different time and there was really no duration that was tied to performance of that contract, then that's going to generally be more indicative of an independent contractor relationship. So we threw a lot at you right there. But the last slide here on the totality of the circumstances, we do want to reiterate that the totality of the circumstances analysis really does encompass all relevant facts and circumstances, not just the IRS criteria and the size policy statement that we just discussed. So some of these factors could include the purpose of the HUBZone program, one of which is to increase employment opportunities and benefits in HUBZone areas. We will also generally look at evidence of subterfuge. If there appears to be an indication that folks are trying to circumvent the eligibility regulations for the program, then that's something we'll generally consider in the totality. And something we also discussed in kind of the size policy discussion was also industry customs and standards. If it looks more like the individual that's being brought on as an independent contractor is generally going to be treated as an employee in that industry to which you're applying for HUBZone certification, then that individual might be treated as an employee. But again, it's a very fact-intensive analysis. And please note also that the totality of the circumstances is an analysis that lives with you throughout your entirety in the program. So not only initial certification, but every step along the way. So SBA also will review the facts and circumstances of your particular firm at program exam, in the protest setting, any time where compliance would be evaluated. And so if we have information that would lead us one way at the time of initial certification, but new information on a program exam or a HUBZone status protest, then SBA will look at that new information and make a new determination. And I can't stress enough down here at the bottom that the totality of the circumstances analysis should not be construed to permit deliberate misclassification of employees as independent contractors. So please don't bring on independent contractors with the intention of using their employment status for HUBZone eligibility purposes. This generally contradicts the employment goals of the program, and generally we will review that in the totality of the circumstances. We're almost through it. We're on the last part of the regulatory definition of employee, which states that volunteers, i.e. individuals who receive deferred compensation or no compensation, including no in-kind compensation for work performed, are not considered employees. However, if an individual has an ownership interest in and works for the HUBZone Small Business Concern a minimum of 40 hours per month, that owner is considered an employee regardless of whether or not that individual receives compensation. Current SBA guidance does allow individuals receiving in-kind compensation to qualify as employees. However, if that's the case, if you're attempting to qualify an employee receiving in-kind compensation as an employee for HUBZone program purposes, please note that SBA will require and review the following. A written employment agreement laying out the terms and conditions of that employment, including the consideration that's being received for work performed, as well as documentation showing compliance with the terms of that agreement. So what we're looking for in the employment agreement is the hours worked, what the individual will be doing, and ultimately what the individual will receive for performing that work. For documentation showing compliance with the terms of that agreement, SBA would like to see that the parties are actually carrying out what's prescribed in the employment agreement. So if rent is going to be provided for an employee, then we would like to see documentation showing that rent is being paid or provided for that particular employee. Quick note on in-kind compensation. The Federal Register notice that addresses in-kind compensation limits discussion to rent and food. And therefore, SBA will generally look at in-kind compensation kind of with that guidance. So we've seen in the past, we've seen some creative attempts to create employees through in-kind compensation that may not meet that kind of same level as rent or food. So please understand that if attempting to use an in-kind employee as as an employee for HUBZone purposes, that we will look at that and we may have follow-up questions or we'd like additional information on something like that.
So I just want to go back to what you were saying in terms of not enough for me to say I'm providing housing for this employee. I actually need to have an agreement that I'm providing housing valued at $1,000 a month. In exchange, this person is to work Monday through Friday from 9 to 3, something like that. Now, and then the documentation showing compliance with the terms of agreement, would those be, for example, timesheets or something like that? Because I would imagine when you were talking about that, earlier on in this presentation, we were talking about payroll, right? So if I have payroll records, and then I have one individual that is not in my payroll records, but it is receiving this apartment. So I somehow need to also prove and have evidence that when I submitted that bid, I'm counting that employee because that employee worked 40 hours a week, for a month. And so I have to, the agreement is not going to tell me that that employee worked the required number of hours. What it's going to tell me that that employee worked the required amount of hours was a timesheet or something.
Absolutely, right.
Yeah.
And this is not a tax law seminar, and we invite you, of course, to seek out additional guidance or legal advice if you do have any questions. But as a general matter, if in-kind compensation is generally going to be treated as compensation and wages for IRS purposes,
right.
And if that's the case, then we're generally going to be looking for payroll taxes or employment taxes
to
be withheld because that's the basis for the employment.
Right.
So that's also something that we'll generally look for. Request.
Right.
So.
And and this opens up a good opportunity to kind of, and we have it in the list of supporting documents, kind of the minimum required data elements that these pay documents need to have. So a payroll or a timesheet, in regards of this topic that we're talking about, needs to contain the name of the employee, right? The number of hours they work, the period that they work. It needs to have a start and an end date. Because remember that the employee definition says an individual is counted as an employee if they work a minimum of 40 hours. If you don't have those minimum data elements, then it's impossible for the company to determine if that person is counted as an employee or not, because you don't know exactly how many hours they work because there's no record that would tell you that.
Sure.
Okay.
Right. So kind of piggybacking on that, we're just going to flush out, again, some guidance on supporting documentation of employment. We want to highlight the different documents that SBA will ultimately collect to verify compliance with the 35% HUBZone residency and principal office requirements. Primarily, we're going to look, as we already mentioned, at payroll records. Mariana just discussed it. I'll go over it one more time, just in an abundance of caution here. Those payroll records should show, at a minimum, the pay period beginning and end dates, the employee's name, the number of hours worked for that pay period, and the wages. SBA generally does not accept payroll summaries because payroll summaries will not include that information. In addition, we'll also generally collect a statement explaining whether all officers of the firm are shown as employees on payroll. And again, this is just going back to the regulatory definition stating that owners will be counted as employees if they work more than 40 hours per month, regardless of whether they receive compensation. And if they don't receive compensation, they likely won't be on payroll. So that's why we ask that question. And finally, we ask for a statement explaining whether all individuals who perform work for the firm are shown as employees on payroll. And this goes to, as we've kind of already discussed, independent contractors, leased employees, union employees, anyone who would be performing work for the firm that wouldn't be on payroll. SBA would take that information and analyze it to determine whether those folks need to be included as employees or should be included as employees, because as we already discussed, temporary or leased employees are generally going to count as employees for HUBZone purposes. Independent contractors, the presumption is no, that they don't count. However, we collect that information to make the analysis according to the totality of the circumstances. So if it is a temporary or a leased employee, we would have to collect the applicable employment agreement and payroll accounting, which is generally going to be provided by the leasing concern. For independent contractors, we would be looking for the independent contractor agreement, if that agreement's been reduced down to writing, a description of the services provided by that independent contractor, invoices for payment, and also proof of payment. So we'd be looking for the invoices that they submit for the services performed, as well as the checks or the vendor payments that go out.
Yeah, so this slide, what is nice about this slide, it's almost like a little check for me as an owner to kind of say, okay, who is working for me? And I will look first at my payroll, then sort of like, okay, who else is working for me that is not in the payroll? Officers, the owners, you know. Is there anybody else? Am I getting anybody from a 10-pager, the union, any independent contractors? Because if I miscount, if I overcount or undercount, then that leads me into a path of decertification if I'm already certified. Not getting that lovely contract that I worked so hard in bidding for, or not getting my certification. So I need to make sure that my count is correct into the number of employees.
So our last big topic in today's webinar is affiliation in the HUBZone program and how it might affect a firm's compliance. The general rule of affiliation is that concerns and entities are affiliated if one controls or has the power to control the other, or a third party or parties has the power to control both. Now the grounds for affiliation that we're going to discuss are actually in SBA regulations. At Part 121, 103, if you'd like to take a closer look, I've listed the most common grounds for affiliation that we generally see in the HUBZone program. That would be common ownership if firms are both owned by the same individual or individuals. Common management, and that would be where the officers or managers running one firm also run another firm. An identity of interest through either economic dependence, and that's generally, in a nutshell, where one firm derives a very high percentage of its revenue from another firm. If that's the case, those firms will generally be affiliated by an identity of interest. But the other ground for identity of interest is actually a familial identity of interest, and that's where Company A is owned or controlled by, let's say, by you, and Company B is owned or controlled by a very close family member. Those would be affiliated by an identity of interest. Concerns can also be affiliated by joint ventures, and that's, there's general joint venture affiliation, but there's also contract-specific affiliation. And so that's not really the focus of today's webinar, but if you have questions about that, please refer to the regulations. Franchise and license agreements can also give rise to a finding of affiliation. And then our favorite, the totality of the circumstances. And there's plenty of regulatory case law on that if you have any questions. But the totality of the circumstances affiliation is very similar to the totality of the circumstances for HUBZone program purposes. So now specifically affiliation in the HUBZone program. SBA regulations state that a qualified HUBZone small business concern or an applicant may have affiliates provided that the aggregate size of the concern or HUBZone applicant and all of its affiliates is small. So what this means for our purposes is that SBA will generally not consider the employees of affiliates in assessing a firm's HUBZone eligibility unless SBA determines that the firms are acting as one in the totality of the circumstances. So stated otherwise, if a firm is applying to the HUBZone program and it has an affiliate, either by common ownership or common management or an identity of interest, that firm, not the affiliate, but the applicant firm's employees will be treated independent of its affiliate unless SBA reviews all the facts and circumstances and determines that those firms are acting as one in the totality of the circumstances. So on this determination, SBA aggregates the firm's employees in assessing the applicant's compliance with the 35% and principal office requirements. Quick note down here at the bottom that this totality of the circumstances analysis or process does not extend HUBZone certification to an affiliate firm. So if an applicant applies to the HUBZone program, it has an affiliate, and SBA determines that they are very closely linked and they are acting as one in the totality of the circumstances, SBA will look at both firms' employees collectively to determine the HUBZone applicant's qualified HUBZone status. However, this does not provide qualified HUBZone status to the affiliate. If the affiliate wants to seek HUBZone status, it should apply for and receive HUBZone certification from SBA.
So to clarify a little bit, when we're saying SBA will not consider the employees of affiliates in assessing a firm's HUBZone eligibility, so it is possible then that I have an affiliate and I'm small with the receipts or the employees, the aggregate, for size purpose, I have some firm, I'm small. But then SBA determines that I'm acting as one with my affiliate. So we did the analysis of the size, and it's fine, check, I'm small. But then now, HUBZone goes a step further then.
That's correct, yeah.
Yeah, go ahead.
Yeah, and so what this basically states is that you can have affiliates and you will still be treated independent for HUBZone compliance purposes. That's the general presumption in the HUBZone program. SBA will look at the affiliate firms for size. If you're good for size, because that is an element of eligibility for HUBZone, you do have to be small with all of your affiliates. However, the employees will not specifically count towards purposes of 35% or principal office as a general presumption unless SBA has ultimately looked at the totality of the circumstances and determined that the firms are acting as one. And if that's the case, then SBA will look at both of the firm's employees for purposes of 35% and principal office. So it's already a foregone conclusion that those are small, they're affiliated, and for size purposes we have to count both firms' revenues. But we'll only look at employees for 35% in principal office purposes if, after considering the totality of the circumstances, SBA determines that they are acting as one.
Thank you.
So it's important to note that the totality of circumstances test, again, is very fact-intensive. It's a very fact-intensive analysis. We do have some guiding principles and factors that we use in determining whether firms are acting as one in the totality of the circumstances. And I just wanted to list them here. These are non-exhaustive factors, but the types of things that SBA would generally be looking at here would be, perhaps if they have very similar or the same contact information on government contracting profiles, like on the System for Award Management or the Dynamic Small Business Search. If individuals pop up on both firms, that might be more indicative that the firms are acting as one. Generally, SBA is going to review whether the firms are acting in the same or similar lines of business as demonstrated by NAICS codes. That's primary and secondary NAICS codes. So your primary industry classification, but also industry classifications for which you're qualified to perform work in. So if two firms are performing the same or very similar work, it's more indicative that they might be acting as one in the totality. Do the websites for the firms look the same, or in some cases, do they share a website? If it appears that the websites are managed by the same individual or company, or they look very similar, or there's a link to one company's website on another company's website, then those are generally things that will be considered in that totality analysis. Another factor we look at is whether the companies have the same or similar names. So sometimes we'll see, on the next example we'll actually see it, but we'll see a slight nuance on one company's name, and that company is ultimately applying for HUBZone certification, but they're leveraging the name of the other company, then that's generally something that we're going to look at in the totality of circumstances. Does one company have a doing business as or fictitious trade name for the other company's name? If there's one company that's doing business as the other firm, then that's generally, even if they are registered legally with the state as another entity, then that's generally something that we're going to look at in the totality of circumstances. If they're very similar, again, they're leveraging their market capabilities, they're leveraging their goodwill, and that's more indicative of acting as one. Do individuals that work for the applicant appear on the other company's payroll or report? And this is really getting to the heart of shared employees. Shared employees, they would count for HUBZone program purposes if they work the minimum 40 hours for a HUBZone firm, but even if they don't, then we would look at the shared employment arrangement to determine whether the firms are acting as one in the totality of the circumstances. And I'll just clarify here that shared employees, if they meet the regulatory definition of employees, will always be counted for HUBZone program purposes for the applicant concern or the concern whose qualified HUBZone status is at issue. The non-shared employees will only be counted if, in the totality of circumstances, SBA determines that the firms are acting as one. So that's kind of a common misconception that we just want to clarify. Shared employees are always counted for the HUBZone applicant if they meet the 40-hour minimum requirement. The non-shared employees will not be counted unless SBA determines that, again, they are acting as one. Do the companies share equipment, office space, or customers? And again, this is not an exhaustive list, but if the firms are sharing, if they have shared services, if they're sharing office space, if they have very similar or the same customers, or they provide different products for the same customer, then these are all indicative of more of an acting as one relationship. And the last factor there is do the companies contract with each other? And now this includes subcontracts on federal or non-federal work, but it also includes things like shared services agreements. So kind of if they're similar to sharing office space, if they're sharing administrative services like payroll services or telecommunication services, then the fact that they share those and have a contractual arrangement is something that we would look at in the totality of the circumstances. So this is an example that we provided just kind of for reference and guidance. Again, I can't reiterate enough that this is a very fact-intensive analysis. And so we're not trying to invite folks to work around this example by any means, but it's just an example of some of the things that we've seen in the past, and hopefully it can help you going forward. We have Bob here. Bob is the sole owner and officer of Personnel Hub, Inc., which is a startup HUBZone applicant company formed to provide staffing solutions for federal clients. He is also the sole owner of Personnel, Inc., a non-HUBZone firm with substantial experience performing identical services for state and local government clients. The firms share office space, equipment, and common contact information. In addition, Personnel Hub, Inc.'s only employee is a project manager for Personnel, Inc. So here we have an obvious example of affiliation by common ownership. But in addition to sharing that common strand of ownership, they also have very similar names. One is Personnel, Inc., one is Personnel Hub, Inc. They offer identical services to similar but not the same clients. They have shared office space. They have shared equipment. They share employees, but not only do they share employees, they share a very key employee. They share a project manager. So the only employee of Personnel Hub is a very key employee for Personnel, Inc. And so based on these facts alone, in a very closed environment, SBA would likely find that Personnel Hub, Inc. and Personnel, Inc. are acting as one in the totality of the circumstances, and therefore SBA would likely aggregate the firm's employees for purposes of evaluating compliance with the 35% HUBZone residency requirement and the principal office requirement.
For Personnel Hub, right.
For Personnel Hub, right.
Exactly.
And again, let's just say that we do aggregate them and Personnel Hub still meets the HUBZone requirement. This does not extend HUBZone certification to Personnel, Inc. So Personnel, Inc. can't now just bid on HUBZone contracts in their own name and certify to the contracting officer that they are HUBZone certified.
Yes, they would have to apply on their own.
Absolutely.
Yes.
Oh, I'm sorry, I misspoke. Now we're talking about the last topic for today's webinar. Best practices for maintaining compliance and demonstrating compliance. And we're going to just talk first about the 35% HUBZone residency requirement. What are ways that we've seen in our experience that would help you maintain and demonstrate compliance at any point? The first thing that came to mind was to promote a culture of immediate disclosure for any changes to an employee's residence. We understand that in many cases, sometimes HUBZone eligibility can hinge on just several employees, and it's very crucial that you as a business owner would know exactly where your employees live, especially those who are qualifying for HUBZone program eligibility purposes. So a culture of immediate disclosure would help you know if someone who is residing in a HUBZone moves out, then that might affect your eligibility or numbers. You might need to go out and find additional workers who reside in a HUBZone.
And I want to expand on that because we've seen that firms that have maintained the certification for many years, because there's no, I mean, a company could stay certified as a HUBZone for a very, very long time as long as they continue being in compliance. So what happens is we see that the companies, when they're recruiting new employees, they actually talk a lot about what being a HUBZone company means to the firm, to the community that they serve. Because they need to, besides obviously the work that they're doing, they need to make sure that that new employee that is coming in, whether it's a HUBZone resident or not, understands the mission that the company has also is to the well-being and economic development of the area. So they sometimes offer incentives for new employees to move into HUBZones, paying part of the rent, a lot of the rent, or increased salaries. But most important along the lines of that first bullet that we have there is that the employees understand what HUBZone means to the community. So they will understand if they have to move for whatever reason, they understand that, oh my God, I need to mention this because I know how that is so important to my firm.
Absolutely, yeah. In addition to that, if your firm is attempting to maintain the required percentage of HUBZone resident employees, we recommend keeping very accurate records regarding the relevant time frame under which you're attempting to maintain, as well as the documented efforts you're making to come back into compliance with the 35% HUBZone residency requirement. So yeah, we'd be looking for the dates that you'd be falling below during the performance of a HUBZone contract only, as well as the job postings that you've been making, records showing attendance at the job fairs in and around the HUBZone areas. And I mention this only because, HUBZone requires you as a HUBZone firm to keep records for 6 years demonstrating your compliance at any point in the program. And so that's why we ask you to keep records going back, even if you were attempting to maintain 3 years ago on a contract that has now ended. We'd still like you to keep records of that. In addition, we ask that you keep records of the residency for each current and former HUBZone resident employee, including the driver's license or voter registration cards. And that includes driver's license starting from the date employment started and continuing all the way through the current period, or at least until the period that employee left employment. Signed statements of residency along with proof of residency, like a utility bill or a lease agreement, if that employee cannot provide a driver's license or voter registration card. And again, in the absence of those two primary forms of documentation of residency, SBA will accept a signed statement of residency along with a secondary documentation of residency, like a utility bill or a lease agreement. But again, the point here is if a firm is required to keep records for 6 years, keep records all the way going back, including the expired driver's license, the expired leases, the expired utility bills. And last, and certainly not least, is the HUBZone map determinations for each HUBZone resident employee that's covering the length of employment. So if that individual is an employee and qualifies as a HUBZone resident employee at the time of employment, we would ask that you keep HUBZone map determinations starting at the date of employment and continuing as long as those individuals are counting as HUBZone employees. And again, this is a very easy, straightforward way to have the documentation at your hands ready to demonstrate compliance at any point during your time in the HUBZone program, which, as Mariana said, could be indefinite, or you could have a certain specified term. But those are just some ways that we came up with. Do you have any additional ways?
Well, I wanted to elaborate on the record keeping, right? The record keeping is 6 years from the most recent review.
Yeah.
So, for example, I know that we have a webinar on maintaining compliance. So if I recertify today's the day that I have to recertify my company, the recertification is the form that I'm completing. But obviously I'm doing some analysis because I'm certifying to a federal agency, SBA, that I'm in compliance with the residency requirement and all that. So I am going to be looking at my payroll records, making sure that I have all that. So today, the 28th of February 2018, is the date that I'm recertifying. So that means that I will have to keep 2024. until February 28, 2024, I need to make sure that I have those records from this date that I recertified, because SBA could come back and ask, can you provide the documents that you used when you recertified back in 2018? Okay, thank you.
And we're going to talk about best practices for maintaining and demonstrating compliance with the principal office requirement. Again, different requirements, but a lot of the record keeping is going to be the same. So keeping accurate lease agreements or deeds, utility bills for all current and former offices, including home offices. So the HUBZone program does contemplate home offices as qualifying offices for HUBZone program purposes, and those offices are held to the same standard as any other office. So keeping deeds if it's a home office, or a lease agreement if it's a leased residence, then those would be documents that you would want to keep. But also maintaining a list of all current and former company offices and job sites, including the complete address of that location, the names of all employees working at each site, the number of hours worked by each employee, the supporting timesheets for each employee, if applicable, the days and times that the site is staffed, and if it's a job site, then we would ask for the copy of the contract as well as the contract number. And the copy of the contract should show the place of performance so that SBA can determine who would be excluded ultimately from the principal office determination. So this is the primary documentation that SBA would request for compliance with the HUBZone principal office requirement. So it's very important to keep meticulous records on this kind of information.
Okay, so we're coming towards the tail end. This is basically information on what else is available in our website. These webinars that we've been doing this year are all going into the YouTube, the SBA channel, and we will be linking to those websites from our site, from other HUBZone websites sometime in April. But at any rate, in there you can certainly find a lot more information about the frequently asked questions. Is a good site that you can attend to. The protest site also has some templates there of actual protests, so that you can see how they look. The other resources that we have, most important, is local assistance. These are free of charge. You just go to that link there and you go to put your zip code and you find the closest offices and to assist you in the application process, or even in selling, obviously, to the federal government. The website site is there, and we provide office hours every Tuesday, every Thursday, 2 to 3 p.m. Eastern Standard Time. The calling number is in our website, in the home page. Do not save the access information, the access number, because that one periodically is changed to mitigate hacking, and we have a help desk also that you can communicate with us. And with that, we come to an end. Thank you so much for your time.
Thank you to our speakers, and thank you all in the audience for joining us today. This call has concluded, and you may now disconnect.